Hello. Well, during volatile markets, investors are increasingly trading foreign exchange instead. It seems that while the equities markets are rallying very strongly at the moment, there's still a lot of concern out there about what's happening in Europe and, of course, what's still happening in the United States and the Korean Peninsula of late. We're joined by Gary Lafferty, who is an independent trader working with the Knightsbridge Trading Academy. And Gary, you're here in Singapore for the Singapore Investment Week.
Yes.
First of all, what can you do with foreign exchange during these volatile times that you might not be able to do with other asset classes?
Well, the first thing I'd say is take control of your potential gains. That's the one thing you're allowed to do now. Anybody with a bit of education, with the markets moving 24/6, can actually take some form of control over their financial future. The other thing is that we can make money as a trader whether the market's going up or down.
There's no gravity like there is in the equity markets, I suppose.
No, because although one would generally make their money quicker when the markets are moving down through fear and greed, it's either way. As long as you know how to get in, when to get in, and how to risk manage, you should be fine.
So let's now look maybe over the next 3 or 4 minutes at some of those key trading strategies. Because, I mean, first of all, you know, there are people who say you should just trade once at the end of each day.
Yes.
And it doesn't matter whether you trade daily or weekly or monthly, as long as you stick to the strategy. Does that still apply, or should you be trading on a minute-by-minute or an hour-by-hour basis?
Definitely find one that you like first and that you know works. So that can be your control. The biggest problem that most amateur traders have is that they try too many things without actually mastering any, which is why a majority of the market will tend to lose money over a given period of time. But this is no different to learning another language. So if you can learn a language, learn the basic, learn the alphabet, then put little words together, then it can grow from there, and then you become masterful at it. It should be functional, then masterful first.
Okay, so in other words, find a strategy that works for you and stick to it.
Absolutely.
Second point, how much money to invest? And, you know, we have the same discussions in the equities markets too. You know, what is the right amount? And some people say, well, I don't have any money to spare, therefore I can't invest, when actually everybody has a little bit of money to invest.
Yes.
What about foreign exchange? Do you really need to pile in with a $10,000 trading account, or can you start slowly?
You can actually start very, very slow with a very small amount of money, but it will depend upon how much you risk manage. So any good given strategy should have a risk management side to that. Once you understand how much you're prepared to risk based upon the strategy, then you can work out how much you can look to start with. So will you need some money? Absolutely. Do you need a massive account for it to get going? No. I'd certainly suggest people start small.
How much? $100? $1,000?
No. So I'll probably say anywhere between $500 and $1,000 to start with, to allow you to do some form of risk management. I'm a great believer in keeping one's risk low. So therefore, no more than, say, 0.5 to 1% percent of your account per trade. So you need to understand how to calculate the risk management, and then the amount grows from there.
And I suppose that's what you teach in your courses.
Absolutely.
But let's focus a little bit more on that percentage per trade.
Sure.
Because when you say 0.5%, and you're starting with, let's say you start with $5,000 in your account, 1% of that is $50, 0.5% would be just $25.
That's it. So that's, once you understand that, and let's say that your strategy allowed you to risk 1% or 0.5%, then you'll take the actual amount you're prepared to, let's say, lose on the market first. You must have the attitude that you are prepared to lose. That is your risk management side. Once you've got that, then you can take this 0.5% and go into the marketplace based upon a strategy which is no more than a predefined entry price, a predefined stop loss price in case it goes wrong, and that is how much you would risk on that particular trade. Only.
But how many trades? I mean, if you then open, 30 or 40 trades, then obviously that still amounts to all of your capital. So how many trades should you have going at any one time?
My personal suggestion is no more than have a portfolio risk at any one time of between 5 and 6 trades. Because finding the trade is one thing, but managing the trade is another. And having 20, 30 out there, your risk to your account is not sustainable. You could be lucky, but it's certainly not sustainable.
So it's like stocks where you would perhaps buy 5 or 6 rather than 30 or 40, and then you're really not able to track them.
Yeah, I think the key thing, like anything else, is quality over quantity.
Okay. Next, let's talk about when to trade. Because, while again, we could argue that, well, the markets, the foreign exchange markets are 24/6, right? Everybody's closed on the Sunday. The question still is the market homogenous throughout that period?
No. There are certain times of the day where there are more movement and therefore more volume. And although the FX market is a very, very liquid market anyway, with well over $4 trillion being traded every single day, there are certain times of that 24-hour period when there are more players on the park, as it were. So certainly when London opening, so we're talking anywhere between, let's say, 7 and 9 GMT in the morning, and certainly when New York opens. So when GMT times, again, anywhere between 1 and 3 p.m. GMT. So the markets are open, but there are far more players on the field, and because as an FX trader, you would make your money based upon the difference in movement, not the actual price. The more people playing the game, the more movement there will be, the better results will be.
Given the times that you've just mentioned,
yes.
Does that mean that you need to be at your computer trading at that time?
No, there are two ways to trade that anyone can trade. You can either place a direct trade, which means an instant execution, or you can actually ask your broker for an order. So when one places an order, as long as you have given the broker a predefined entry place and obviously a stop loss to get you out in case there's a problem, that can be pre-ordered via your instructions to the broker, and they'll execute your instructions for you.
And these are finite times. For example, you mentioned 1 p.m. to 3 p.m. That's only 2 hours. Does that mean you need to buy and sell within those 2 hours, or you buy one day and then the next day between 3 and 4?
Again, depending on the strategy. So I think, as I've mentioned before, that in order to be successful, one must have a strategy and stick to it, and then grow your box of strategies. So depending on which strategy you use, that would be dependent on which time frame one uses. So you could trade a daily chart or a daily bar chart, in which case you would look at it at a certain time of day, and the broker will get you into the trade once the price has gone through your entry price. So whether that goes through within the next few hours or goes through the following day, the entry time is irrelevant. It's the entry price that we're concerned with in the marketplace.
That's the one that you give the order to the broker for.
Yeah.
So we've discussed when to trade.
Yes.
How often to trade.
Yes.
How much to trade.
Yes.
Now, how much should you actually realistically expect to make on the trade?
Now this is where I think most amateur traders overestimate how much they're going to be. Could you make a lot of money from trading? Absolutely. But I think it should be very much of a long-term growth strategy.
We don't usually hear that about trading.
No, absolutely. I think everyone goes for the get-rich-quick schemes, and they want to make money as quickly as they possibly can. Trading, as I said before, is a vehicle that you can control for your investment and your future. So in order to do that successfully, one should start small and grow it exponentially. And I'm a great believer that when I trade my trading accounts, and the people I've taught how to trade before, is to measure your success in the percentage gain upon your account, not the monetary gain. Because as long as you measure your success in percentage gain, the money you gain is an automatic byproduct. It's also far less emotional.
That's right, because you might think, well, I really need $600 or $700 to renew my road tax on my car. I'm going to quickly make that in the market.
Yeah, totally wrong reason to trade.
Right.
Totally wrong reason.
So what would be an appropriate percentage to make then? Let's come back to our previous example.
Yes.
We were talking about trading maybe 1% of a $5,000 portfolio.
Yeah.
When you then say, well, if we're going to make 2% on the trade, that doesn't sound like that. Sounds like a couple of dollars.
Yes, and it is. But if you think about it, when it comes down to the mentality of why you're trading, if one was to put $5,000, $10,000 into your bank, what percentage gain would you look for at the end of the year?
Well, 1% at most.
Taxable. Yeah, so there's taxable on that anyway. So when you think, well, if I can make 1% per month, doing exactly the same as the banks are doing, I'm taking far more control. But if you then say, well, I hope I have 2% per trade, or 3% or 4% per month by trading half an hour a day, learning a skill set that would literally is a lifetime skill set because the markets will always be there, then that would be a reasonable return for the average trader out there.
3 to 4% per month.
Per month.
Right, and then it doesn't matter whether it's 3 or 4% of $100 or $1,000.
Exactly, or a million. Exactly, yeah.
Because you're not focusing on quickly winning $500.
Correct.
Like you would in
the casino. You are consistent, and that grows and grows and grows. So as a trader, we earn our money via compounding or exponential growth. So as long as one isn't making a buck, taking a buck, making a buck, taking a buck, your account and your future grows. You take something like 6% per month. If you do 6%, let me give you some figures. 6% per month, every single month consistently, you'll double your account every year. Not the first year, the first year, the second year, the third year, the fourth year, and so on.
That's what you mean by exponential.
Absolutely.
All right. Thank you very much for coming in today.
You're welcome.
Gary Lafferty from the UK, who's here specially for Singapore Investment Week. He's an independent trader with the Knightsbridge Trading Academy, and the website on your screen now is the place to go to find out when Gary and other speakers are speaking during Singapore Investment Week. But let me ask you something, Gary. You know, there are a lot of these traders around, traders, educators, you know, and you see them advertised in the newspaper for several $1,000s you get to go along to a course. So how's Knightsbridge Trading Academy different from that?
Well, one of the reasons why I agreed to speak for them and train their people is because they're giving you the education for free. To trade successfully...
So does that mean, hang on a minute, does that mean that you have to open an account or something like
that? You don't have to open an account, but you can't make any money unless you have opened an account.
Right. But it's not tied. It's not free, free in order to open an account.
No. So you would find a lot of financial institutions, let's put them that way, would want to entice your money by giving you free education.
Yes. They want you to trade, obviously.
Because they want you to trade. That's how they make their money. Whereas what KTA are actually doing is giving you the education and say, look, do you like the language? Do you like the financial language, the forex currency market language? Once you like it, then maybe you would like, if you'd really want to later on, invest in yourself and get more education. But if you don't like it, well, at least you've had 2 good days of learning about the markets, of how you could control your future, but without any financial prodding or enticement at all. So.
Right. So, but the way you guys make your money is through education, not through trading.
Absolutely.
That's my point.
Well, the way the company will make their money is as an education, but obviously as a trader,
yes, I
would like to see a lot of people trading, because it's just just once you understand how you make money as a trader, you'll never look back at it.
Really? What did you do before you became a trader?
I worked in the property market and was a chartered surveyor. So, but I did have to put my hours in as a mortgage and kids and wife, etc., and I had to trade part-time.
Right, but obviously you were successful at it, otherwise you wouldn't have given up.
Eventually. It took me a good few years to get there, but I did it alongside. I think this is where, unfortunately, a lot of the amateur traders go wrong. They want it instantly quick, and it doesn't.
Yeah, but then again, there are a lot of courses that promise this. I mean, again, you just have to look at the newspaper advertisements, and there are, you know, come for the one-day crack course, and afterwards you'll make $1 million in the forex market.
Yeah, of course you could. But ultimately, no matter what the education they give you, good, bad or indifferent, you're the one still responsible for pressing that button. You're the one responsible to get into the trade, get out of the trade and manage the trade. But
earlier on you were saying it's like learning a language, the financial language. You can't really learn a language in one day.
No, exactly. I think whereas other companies would say, look, you learn all the secrets you can do in a day or 2 days, I just see it as a language. In 1 or 2 days, maybe you might learn the alphabet, you might be able to put a few words together, like dog, cat, bat, buy, sell. You know, but it takes practice to become fluent.
Right, and so that's what you do differently, I suppose.
That's what it is. It's being able to make sure that you have the foundation and the right attitude to go through the hard bits, because it doesn't matter how much money you've got. A losing trade is a losing trade, and it does hurt.
Yeah.
It does hurt, and you know you've got to have the good emotional skills to be able to deal with that, to move on to the next trade.
Speaking of languages, I have it on good authority that you speak Cantonese.
I do.
Can you say a few words for us? It's unusual to see a Westerner be able to speak let alone Cantonese.
我係半中國人，我阿媽喺中國，我係喺香港住3年。不過而家我中文好差而家。
That's fabulous. And are you going to give the course in Chinese as well?
No, I think it's better in English. I'm a better trader than I am, so I'm a Cantonese speaker.